Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is the Forex quick look. I'm going to take a look at the dollar versus Canada. Today's date is November 6th, 2024. Let's get started. Of course, we have all the fireworks from the U.S. election, but what is clear is that there is a mandate that goes to the GOP, Donald Trump leading as the president. The Senate is a Republican. The House of Representatives is tilting to that way as well. That's going to give a lot of leeway for the GOP to do their thing. So go out and do it. Means less government spending, more privatization, less regulation, more protectionist of America. It has implications on other countries, and what we're seeing is the U.S. dollar benefit from that. So with that framework in place, I get the easy part. That is talking about the technicals that are driving the markets. So I'm going to do that in this video. All right, in trading yesterday and earlier this week, the price moved lower into the U.S. election. That low price came down to a level of that I had as earmarked. I've made it a nice, solid red line. Why? Because it corresponded with these lows right here from not last week, but the week before. A number of different swing lows for here, that found support buyers, formed a floor before moving to the upside. So you look for those levels, and that's where the market went down to in trading yesterday into early today before it found support buyers. And we started to get the election results, and we started to see a retracement of all that move to the downside. And in the process, we moved back above the 100 bar moving average on the 4-hour chart. That's this blue line in the chart. We also moved above this high right here. There's this number of highs right there, and above the number of highs up here. And maybe even this low right here. We came back down to the level and tested that level right here and here before moving lower. The market has continued its march to the upside, moving all the way up to the high price that we saw on Friday's trade. That high price on Friday, by the way, broke through the 2024 high price at 1.3945 on its way to a high at 1.3958. And as you can see, we're just below that high price after going up and testing it. So what do we know from a technical perspective? Break above that level opens a door for further upside momentum. Now the problem with that the further upside momentum, if I go to the daily chart, is that you go all the way back to this point right here. That would be the next target on the top side. It comes in at 1.3977. So we're at 1.3958. We have another 19 pips till we get to the 2022 high price. And then if we break above that level, then we're talking about trading at the highest level going back to 2020. So you can argue that the 58 level, the 45 level, this level right here, and the 77 level are all form the high for the dollar versus Canada targets. And when you have that, like 1, 2, 3, 4 different levels, then traders can lean against that level with the stop on a break above. And so, if you sell at 62 and the price goes above 77, you stop yourself out. That's an option for traders. Now, fundamentally, the dollar should go higher. Interest rates are higher. Canadian, they're not going to benefit from a Trump administration. Probably a slower growth ahead. You'd expect. So you'd expect that the dollar, may be continued to move to the upside, break above the 139.77 level. But there still is that option. There's that hope that traders will lean against the 1.3977 level and push the price to the downside. So if that should happen, what do we need to see happen that would give the sellers some more comfort, some more control? Because obviously the fundamentals are not pointing that way. All you have to do is look at the rise that we've seen through here, discounting this correction here. What the levels that would tilt the bias a little bit more to the downside, I have to focus on right here at the 100 and 200 hour moving averages. If the price moves below those levels, near the 1.3900 level, the sellers start to gain a little bit more confidence. If they're able to get below that level, that I think would give at least the buyer some cause for pause and give the seller some hope that as long as the price were to stay below that level and maybe move through these targets and get down below the 100 bar moving average on the 4-hour chart, that it would give them that trading opportunity, the chance for profit. But absent that, the buyers are still in control. So this is a risk defining level right here. If you like the dollar, if you like the dollar versus Canada, you probably have to put your stop down below the 139 level. If you still want to take a chance up here at the highs, you have that option too, but just don't go above the 139.77 level, okay? That's my advice. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.